market, a massive shock. Closing bell brought in the biggest daily percentage loss in about 2 years. I'm Chris Lawrence with Jason Wheeler. You see his Right on the Money reports every week on WFAA. There's really no better person to put this in context, given all of your insight on saving and investing. And you got to figure some folks are obviously a little concerned.
I'm right there with them.
Yeah.
I was a lot concerned as I was watching those numbers. It felt so good when that final bell rang today and it had to end, at least for another day. Chris, right from the opening bell this morning, stocks were just plummeting. The Dow started the day off by more than 1,000 points today, ended up the same way. We've been keeping our eye on the major companies suffering here in our area too. Businesses like AT&T, ExxonMobil, Dell Technologies, D.R. Horton, all in the red, although ExxonMobil is a Texas company, not necessarily DFW, but all of them going through it today, just like, the broader market. This was a huge sell-off. This is just a continuation of what began on Friday. We saw a big drop then after a U.S. jobs report came in weaker than expected. Now, many analysts do see softness in the economy right now, but not huge problems. So they believe that this sharp pullback we've been seeing is being driven more by pressures created by interest rates and market plunges in other parts of the world, as well as fears that the U.S. could dip into recession. Now, right now, though, unemployment here is at 4.3%.
That is historically low joblessness, but it does show that joblessness has increased more than 0.5% since January, when unemployment was 3.7%, something that doesn't usually happen when the economy is healthy. A rise like that is historically a sign that a recession is imminent.
But not for sure. So again, a lot of fear in the market, a lot of volatility right now as well. We do have to point out that the U.S. economy is still strong. You may remember that it grew more in the last quarter than was expected because a lot of people were out there spending, and consumers are in large part responsible for how this economy does.
Jason, given the market fluctuations as they are right now, some folks are maybe wondering if now is the time to take out that personal or business loan.
Yeah, I think that some folks may have been, ready to pull the trigger and just eat those, higher interest rates that we've been dealing with, Chris. But we just talked with the head of a big financial advisory firm here in Dallas about this. Bill Perryman from Perryman Financial Advisory says right now it might be smart to hold off on that if you can, because we're probably going to see some rate cuts coming. He says you shouldn't have to wait for too long.
Typically, the volume comes back, in September, late September, October. I think that gives us more stability. But I think that when we see that the cuts are coming, I think you'll see investors coming back in.
Right, so he thinks that the market will improve then, and then obviously once you see those interest rate cuts, we should see loan terms improving as well. So good for a lot of folks there. Now, the Fed has been getting bashed a lot today. A lot of observers saying they could have headed off a lot of this by cutting interest rates when they met earlier this month, and that they're now behind the curve. But the general consensus is, at least today anyway, that they're going to get this message loud and clear, and that those long-awaited interest rate cuts are highly likely. That could come, of course, and help us to get, a little bit more favorable terms on car loans, mortgage loans, things like that. We will have to wait and see, though. The Fed, it doesn't meet again until September, so got a little ways to go here.
Any advice for, investors who maybe don't like what they're seeing right now?
Take a deep breath. I did that today. Try to take the emotion out of it. It's hard to. This is your money. It's your retirement account. It's rough to look at on a day like this. I say talk with someone smart if you feel like you want to do something. For instance, if you have a financial advisor, get on the phone with them, have a conversation. Personally, I sold some stuff today that has lost money, and I sold some stuff that has made a lot of money, and I took those profits, and I'll use those to buy something else maybe that has been battered in recent days. It's dicey right now, though, just because there's so much volatility. So, just take a breath as you're doing this. Don't do anything rash. After crashes like this, by the way, the stock market often bounces back big. No guarantees it's going to happen here this time, but we're going to look at some history on that in my Right on the Money report tonight at 10 o'clock, Chris. It might at least take away a little bit of the jitters to show that, we talk a lot about big crashes like this, but there's a light sometimes at the end of the tunnel, too.
Yeah, I looked at where the Dow Jones stood on January 2nd, first day of the year. even with today's catastrophic decline, we're still up nearly 1,000 points from where we started the year.
That's good perspective. You know,
Yeah.
we tend to get in this hole today and think that there's no light, but you know, you look out at the longer term like that and you go,
And
okay.
you've said it so many times. It's a marathon, not a sprint.
Oh yeah. You got to be careful about it. Save some, save a little bit in reserve there.
Great advice. Thanks. Great perspective too. Thank you, Jason.